Happy Monday, everybody. I hope you had a great weekend. Today is Monday, January 31st, 2022, the last trading day of the month, and this is your Monday market update video. In case you missed it, last week I did an update on Thursday just to try to add a little bit more commentary to what has been a volatile couple of weeks. You can see that, of course, on my YouTube page, LinkedIn, Twitter, or just check your email from last Thursday. Let's jump into last week. Let's wrap that up, and let's talk about what we're going to look at this week. To say that Monday was a bit volatile would be quite an understatement. The markets opened lower and we're in a crazy risk-off mode. Geopolitical tensions, worry about the Fed meeting, even economic numbers that made us worry that the Fed is going to raise rates into a slowing economy. Remember what that is? Stagflation. There was a pretty impressive snapback rally off the lows. The S&P 500 was down nearly 4% at one point on the day before it started to turn. 284 S&P 500 points in that swing. That's a bunch. Closed up 12 on the day. The Dow was down over 1,100 points and finished up 100 points. That's a 1,200 point swing. NASDAQ was even worse. It rallied from down 5% on the day, over 670 points, to close the day in the green by 87. I guess it makes sense to ask why. What happened to make this a selling day and then a buying day? And are we done selling? Just a quick recap of what we're looking at. Macroeconomically, we're not looking as good as we did last year. Fed is more hawkish. Earnings started off a little bit mixed. Economic data so far has not been so strong in 2022. And there are geopolitics. We focused on Russia, but remember we've got China and Taiwan as well. These will probably all be short-term events, but they will add some volatility to the market as it goes along. Following the huge swings in the market on Monday, Tuesday was a follow-up to that. The markets all gapped lower on the open as they digested the moves from Monday. Earnings, more NATO and Russian troop movements in the area, IMF negative revisions of 2022 global GDP, and even consumer confidence got in on the action. The S&P 500 was down over 100 points in early trading, closed down 1.2%. The Dow was down over 800 points before rallying back, going positive, and then closing down slightly, about 1,000 point swing on the day. And the NASDAQ was down another 2.3% on the day. Wednesday, we saw that more earnings are starting to be part of the story. Nothing could outshine the Fed angst. Remember, we had a 2 o'clock Fed announcement followed by a 2:30 Fed press conference. The market opened higher, lots of calls to buy the dip. Strong Microsoft earnings and guidance gave everyone a warm feeling, that feeling of optimism. It's been missing for a couple of days at least. After about an hour, the market settled in, traded sideways, waiting for that 2 o'clock announcement. When the statement came out, it was interpreted as dovish. The market went up, but maybe we should have expected it. But Jay Powell came out and was very hawkish. He spoke about the fact that the first rate hike should be in March, and where he said that he expected the pace of the hikes. That was the scary part, but the pace of the hikes should actually even be faster than we saw from 2015 to 2018. This was also taken to keep the door open for 0.5% for a 50 basis point hike, which the market is not pricing in. All the major indices turned negative. The Dow and the S&P 500 closed negative on the day. The S&P 500 closed down slightly, 0.15% down, and the Dow down about 0.5%. The NASDAQ managed to eke out a slight gain, less than 3 points, but still green for the day. Thursday was Fed Day +1. And though Jay Powell is trying to keep all the headlines, the market moves on. Overnight and intraday are something to behold, the moves in the market. So overnight, the S&P 500 traded in a 160-point range, nearly 4% high to low. The market gapped higher and opened at the open, helped by economic news from Europe as well as GDP and jobless numbers. The S&P 500 did settle into a trading range until European markets closed, and then the stocks came for sale, settled again, showed some signs of life, and then rolled over again following the 7-year Treasury auction, bottom and traded sideways the rest of the day, anxiously awaiting Apple's earnings at the end of the day. The S&P 500 closed down about 0.5% on the day. The Dow closed nearly flat. The NASDAQ was down just under 1.5%. Quick note on the durable goods number that helped the market off to a good start that day. It was not as bad as it seems. One of the key reading, business spending, still looks strong. So as we've seen from Visa, MasterCard, and even American Express, we're seeing consumer spending strong, we're now seeing business spending strong, and we know the government spending is going to be strong. And we're going to need all of that spending as interest rates rise to keep this economy going. We're going to continue to watch those numbers for you. Another data point to keep an eye on, the U.S. dollar moving back to 52-week highs, closing over 97, and the 10-year yield back at 184. These are the highest we've seen these in a while, and they do matter. We're going to bring back an old one to watch also, and that's the 10-2 spread. This is the spread between the 10-year Treasury yield and the 2-year Treasury yield. Now, you may think we're crazy here, but we need to watch it along with so much else. This is something that will start to get talked about again as it closes in again. Does anyone remember this? It was before I started doing the videos, but when that number gets negative and the yield curve inverts, that's when we start talking about recession. I don't think we're going to see that, but I did want to let you know, get that on the radar. That spread has been nearly cut in half recently. Going on to Friday, we got another amazing number from Apple. They beat expectations on all fronts. Up overnight, the market moved higher, regaining some of its legs and optimism. Many people are calling this market oversold, so that was the explanation for some people. The Dow finished up 1.5%, the S&P up 2.5%, and the Nasdaq just a little over 3% for the day. Big moves to close out the week. What a finish this week that the market put in. I don't know that anyone thought that was going to happen if you would have asked people on Monday. So as we move into this week, we will see a lot of earnings this week. This is the first week of the new month, is of course jobs week. So for the all-important jobs number will be Friday. So as we go through the week, we'll see economic numbers nearly every day. PMI and manufacturing Monday. Throw in daily from the San Francisco Fed. He'll be speaking on Monday as well. Tuesday we'll get more manufacturing numbers and construction, as well as the JOLTS number. Remember, that's the job openings number, and car sales. Wednesday will be ADP jobs. Thursday, the weekly jobless claims and services PMI, and throw in some Fed nominations hearing, which is always good for a soundbite to mess with the market, and we'll see. And of course, Friday will be the non-farm payroll number. Overall, we'll be watching all the economics for signs that the economy is not rolling over, and we're looking for stability of the data so that we can try to remove this stagflation risk. Remember, I mentioned that. Economically, we need three things for this market to stabilize and rebound. Number one, the Fed needs to be clear and stop with the hawkish surprises. Number two, inflation data needs to start peaking. And number three, economic data needs to stay solid and hold off from the stagflation argument. If we can get that and the earnings that should come along with that growth, we have a better chance to rebound from here. Every bit of news has the chance to move markets these days. That is why, contrary to the tone of these videos, we are long-term investors. We like to know what happens day to day and why, but we keep our eyes on the long-term goals. We need to watch all of these news items for how they affect the market and the levels. If we can hold the lows from the last few weeks and even move away from them or even settle a little bit, we have a chance of that bottom being in. This is hotly debated, of course. The key now is to keep our heads. The markets have repriced the growth to a large degree, and that allows for us to look for good companies at better prices. This is what we're going to continue to do. Over 70% of the companies that have reported earnings so far have beaten expectations. That's a good number in line with where we've been recently. If that continues and the earnings number keeps rising, we know that the price component has come down, so the valuations are more palatable at these levels. This market will keep up the volatility until we get better clarity from the Fed. So as we see rallies like Friday, it may be time to look at your portfolio. And as I spoke about on Friday and pretty much every other video I've done, use the market moves to rebalance your portfolio to get your risk levels in line. Also keep in mind of what changing market conditions are doing. Let's wrap up this month with some facts going into today's trading day, the last trading day of the month. The S&P 500 goes into today down more than 8% from the intraday high, down 7% this month. The Dow's off 4.4% for the month, and the Nasdaq off 15% from its November high is down 12% this month. You'll start to hear the comments about how January goes the year, but like so much in the past 24 months, I'm not so sure I give so much weight to this. So much is unique. It's different this time, but really it's just not always exactly the same. So sort of history may not repeat itself, but it may rhyme. I'll keep the information coming, more special bulletins like last week if necessary, but watch for the Friday planning video. As always, please email me or call me with any questions. We'll be in touch. This is only 1 month of your journey to reach your goals. Not a pretty month, but if you've been doing this long enough, you know that 1 month, good or bad, does not make or break your long-term goals. Watch for the planning video on Friday. We're about to enter that time where you start collecting all your tax information from 2021, and we're going to talk a little bit about some ideas that help to make that easier. Have a great weekend. Have a great week. Sorry.